Afternoon. Today, good afternoon. You are listening to the 12 at 12 with Paul Smith, a real estate agent, entrepreneur, generally overall good guy, I'd like to think. And we're going to talk about a bunch of stuff today. We're going to talk about what's happening in the real estate market. We're going to talk about what's happening in the global market, to include gold, silver, crypto. I feel like is about to pop off right now. But before we begin on that, I'd like to go ahead and knock out my thumbnail photos. Alrighty, we got that knocked out. Now my social team, everybody in post will greatly appreciate that. Again, this is Paul Smith tuning into the 12 at 12. I'm a co-founder of 12 Rivers Realty, a real estate investor, developer, own multiple bars, actually getting ready to open a new one. Super excited. We're going to be doing an Italian wine concept, partnering with 3 Italian sommeliers from Florence. And so this will be very authentic, actually run by real world Italians, not New World Italians like myself growing up in the Northeast. Since I pretty much speak the third most Italian in our group, I will not be running it. However, we'll be able to enjoy a lot of Italian wine that a lot of other people can't get. Again, this is Paul Smith with the 12 at 12. Man, how's everybody doing out there today, man? I want to start off with a story recently that one of my agents had, going through going through the buyer process. And they have an inspection report. I looked at the inspection report. For the most part, it was pretty clean. Looks like they're going to do they're going to get a new hot water heater and maybe some other stuff. Well, then the buyer goes and runs the inspection report through ChatGPT. And I'm thinking to myself, oh Lord, this can't be good. ChatGPT essentially tells his buyer to not purchase the home because, one, it mentions what's called a conducive condition for wood destroying insects, to include termites. Well, all of a sudden now that buyer thinks that this home has termites, which the inspector did not find active termites. However, anytime that you have wood to ground contact, it's what's called a conducive condition. Other conducive conditions can be if you have branches resting on top of your roof, if you have bushes in front of your house where people cannot see behind that, they can't see any of the mud tubes going up for termites, stuff like that. All those things are conducive conditions and very important to have trimmed back and or have treated, but that does not mean that you have active termites. And the other was that the ChatGPT said that the house has a potential to burn down because there was some lint in the dryer vent, which, one, by the way, those fires do happen. Very important to go ahead and make sure, if you're a homeowner or a renter, to make sure that you're cleaning out your dryer vent pretty consistently, because that lint does get stuck in there, and over time, yes, it could cause a fire. And is that a reason to walk away from your home that you enjoy? No, it's not. So please, guys, do not run your inspection reports through ChatGPT. And if you're working with an agent that has less knowledge than ChatGPT, you should probably get a new agent, honestly. Like, ChatGPT is great for a lot of things. Do I think that ChatGPT understands the Texas market and what's important versus overall world real estate? I'm sure on a general level, it's probably pretty decent. However, there's there's perception when it comes to inspection reports, and quite frankly, perception is everybody's reality, right? I can look at a report, and you may look at a report, and we could think, have completely two different outlooks on it based on what's there, and that's going to be based on what I find important versus what you find important. Um, but I'll tell you what I would not do is have ChatGPT be the gospel for real estate inspections. Also, ChatGPT is not a lawyer, not a doctor. Please, guys, hire professionals for this. And again, if your agent, attorney, doctor can doesn't have the knowledge of ChatGPT, then what I would do is either one, find a new agent, or two, pay that person a lot less, basically, because you're not getting the level of professional value that you should be getting out of that. That's my soapbox for the day, by the way. Again, this is Paul Smith. You're tuning into the 12 at 12. There's a lot of stuff going on, man. I don't know if you guys know this, but Trump had talked about buying 200 billion worth of mortgage-backed securities. And this is one of the things that I always talk about, right? It's like, um, in 2008, the mortgage crisis happened, and that was the first time they had, oh, Denise Cook Smith in the house, aka my wife. She's here, always fun. She's actually secretly texting me on the side, telling me things to say, because really I'm just a puppet, and she's the marionette, right? But those that don't know, in 2008, mortgage crisis happens, and it's bad, right? Like it's bad in the way of nobody can get a loan. Previously, investors could have up to 10 homes that were Fannie and Freddie backed. Now, what does that mean? Fannie and Freddie Mac are government entities that basically inject money into the mortgage market, right? And the secondary mortgage market. Thank you. Thanks, babe. I appreciate that. Denise says, for those on other channels, my wife said, "Don't worry, I'm here to save you," which um, is relevant today or at 2 in the morning when it's time for me to leave a club. So, um, getting back to the secondary mortgage market, right? It's the thing that keeps basically the liquidity that keeps the machine going. It's kind of the gas to the engine at the end of the day. It's the coal to the fire. And as this happens, where all of a sudden those loans become so risky and real estate becomes so risky, all of a sudden now Fannie Freddie says that to be conforming, you can only have 4 loans versus 10. Now, as an investor, you can have up to 10 Fannie Freddie loans. And typically, yeah, she says she wishes it was 2. Really, it's 4, whatever. But imagine your buyer pool being able to only get 4 homes instead of 10 homes at the time in which where it's probably the best time to buy a house because the values have just plummeted. So those at the time that had cash did exceptionally well during that time frame. As a quick antidote, there are homes that I had sold in 2007 for about 290,000 that went for somewhere in the 150 range on the east side because investors could not buy anymore. And so over time, those mortgage guidelines, they loosened up a little bit. And at the same time, to get interest rates lower, because again, there's 2 ways that you can make real estate more affordable. Either prices go down or interest rates go down. If prices stay up and interest rates stay up, all of a sudden, those are 2 big factors that make real estate significantly less affordable. Now, there's some other things too: property taxes, insurance. Property insurance is the million-ton elephant in the room right now because insurance has just shot up so much over the past couple of years. There's just a lot of risk. There's a lot of um, natural disasters that are happening, stuff like that. And insurance companies are just getting crushed. But at the end of the day, we're going back to Fannie and Freddie in what they're doing. And so at that time, the government did this thing called in 2008, 2009, you would get what's called an $8,000 tax credit for first-time home buyers for people that had never purchased before. And that was great because what that did is that added a little bit of that was like the ether to get the engine started again, right? And what that did at the time it was dead, and it gave it a quick jump start, right? And almost just like clear, and it started the market again. And for that 6 months, the market was great. Well, what happened after that money dried up is the last 6 months significantly worse because it pulled all the buyers that were going to buy within that, say, 0 to 18 month time frame into the first 6 months of the market. You guys, all real estate is, and all markets are about is just supply and demand at the end of the day. If you have more buyers than you do sellers, prices go up. If you have more sellers than you do buyers, guess what? Prices go down. And so that was a huge thing there, right? And all of a sudden, in the early parts of, say, 2009 area, 2010, the market was packed with all these people that wanted that $8,000 tax credit. And then the last part of it, the market was dead. There wasn't a buyer out there at that point. And what that did is you would actually get a better deal if you bought 6 months later. Because that $8,000, that was, let's say a representation of anywhere from 8% to 2% of a house if it's a $400,000 home, right? And so what that represented, shout out to Lord Finesse in the house. Ness, thanks for jumping in here, man. By the way, Lord Finesse is buying a home soon, so congratulations. Shout out to Ness. Um, but what that does basically is that sapped the market, and it actually meant that those that waited and didn't utilize that, but were able to still purchase, got a significantly better deal. Specifically, if you modeled it out over 1 year, 2 years, 5 years, as far as that goes. So there's a couple things here that we're talking about. One is the government injecting cash into a market and how that can move the market either way. And then the other thing that happened after this was it was called quantitative easing one, or QE1, where the government injected a significant, got drama in the house. By the way, those that don't know, drama is going to be in town February 6th. You will see me there dancing my butt off. Hopefully I'm gonna learn that new drama choreography, by the way. Who knows? Maybe they'll have me up on stage doing it. Gotcha. None of that's confirmed, by the way, except for the fact that they are coming here. Having said that, right? So you start talking about quantitative easing one, and what that did, and I'm going to say it like this, right? The government has entered the chat when it comes to buying mortgage-backed securities, and so what that does is that causes interest rates to go down on mortgage rates, because again, mortgage rates are tied to the 10-year Treasury. Mortgage rates are not tied to the Fed rate, which is when you hear people asking Powell to reduce the rates, that's the temporary rate or the short-term rate. The 10-year Treasury is what mortgage-backed securities are tied to. And all of a sudden, the government starts buying a significant amount of 10-year Treasury and mortgage-backed securities. That dropped interest rates at that point because there's what's called a yield spread. So hypothetically, if mortgage-backed security or the 10-year Treasury is at 3, let's say hypothetically, then mortgage rates are going to be at 5.5, and at 2.5% there, that's the yield difference. And that's what that investor would make based on that. And so all of a sudden, at the pandemic, they're throwing more, like, to the tune of trillions of dollars at the market to try to jumpstart it. Well, what that did is that went from basically being jumpstarting the market to turning it into a Palisades level fire when it came to inflation. All of a sudden, now we're looking at hyperinflation. And then what the government does was called quantitative tightening. They pulled the money back. And at that point, I'll say the government left the chat. Right, the government leaving the chat took interest rates for mortgage-backed securities during the pandemic. I think my dad locked at 2.25 on a VA loan. All of a sudden, people were getting 8% rates. And if you think about that difference there in a lot of ways, for every point that goes up in an interest rate for a house is roughly about 12 to 14% affordability. So when you start talking about affordability and everything else, price and rates are the two things that really affect how much you're going to pay for your home. Well, once the government left the chat, all of a sudden rates shoot up, real estate becomes significantly less affordable. Now, what that did is that really hurt the Austin market because not only did rates go up, but the years prior to that, our prices went up. I mean, they were going up 20, 30% a year, year over year. One, not sustainable. Two, just not healthy at the end of the day, right? Because we know that income is not going to pace 20 to 30% annually at the end of the day, despite the fact that we did have a huge wealth redistribution during that time. During that time, we had a huge wealth reclassification. A lot of folks moving in during the pandemic from California, from the Bay, from New York. All of a sudden, for them, a $1 million home, you might not even be able to get that in the Bay. So a $1 million home listed, all of a sudden, it's multiple offers. They're buying it for 1.5. That seller just made a $500,000 more in that transaction, and it's still a good deal for the person from the Bay because perception, again, like I said, is reality, and their perception of real estate was drastically different than the perception of Austinites. Maybe we got Matthew in the house, by the way. Matthew is one of the dopest artists that I know, and so shout out Matthew for jumping in here, by the way. And so I'm saying all that to say the government is about to enter the chat again. Anytime the government enters the chat, long-term modeling wise, you'll start to see real estate spike. And if all of a sudden the government starts to buy mortgage-backed securities again to the tune of 200 billion, that means that you're going to see interest rates come down. Now, again, there's two ways that you can make real estate more affordable. If interest rates come down, guess what? Prices typically are going to go up. Now, so that's one thing that's happening right now. And so now that's like, okay, we've got that. That's the thing that it seems like it's going to happen. And then on top of that, you start to look at different markets, right? Because what we're talking about on a Fed level, that's US wide. So, okay, that's cool. That's happening here. Now, what are some of the bets that we can take that are going to be like, you know what? I know this everywhere. You're actually making sense to me today. Take a photo of that. Denise said I'm making sense today. That is absolutely great. Wow. Biggest compliment I'll ever receive. Guys, I'm out. Just I've won the day. My wife said it making sense. Appreciate that. Point being this is right. So we've got that's going. That's something that's happening on a national level. Now, what are different markets where we can take that and instead of it being where we just buy anywhere and maybe prices stay the same, some markets actually prices might go down. Well, why would that be? Well, if you're in a market where jobs are coming down in an area where towns and cities are actually losing people, you actually have to have a positive migration of people to your town to be able to buy the homes that are available. Or separately, you have to just start bulldozing. Was Nico? Come on, man, we got to get you down here. By the way, shout out to Nico in the house. Uh, you've got to have with supply and demand. Again, if you've got people leaving your area, and you're either building homes or not building homes, again, if you've got more sellers than you do buyers, your price is going to come down, regardless if interest rates coming down or not. Now, at the same time, there's some cities like back in the day with Detroit, what they actually did is they were saying, like, look, we'll sell property for $1 a property back in the day. If people were demoing them. Well, they were demoing them because they didn't have buyers. And everybody remembers that scene from 8 Mile where they go burn the house down. That at the end of the day was something that needed to be done because they had such an exodus of people leaving the area. And again, that's where supply and demand comes in. And also, that's where this whole situation comes in, where the government and 12 Rivers just entered the chat. And again, this is what we're talking about is that now, if the government starts buying mortgage backed securities, some questions that I have is one, how long is the current runway going to be? Because this is going to be a situation where it's for the next 6 months, and we have another type of a situation where it's going to be um, everybody floods the market. And then on the last part of the 6 months, there's not as many people looking to buy. And if there's not as many people looking to buy, like I said, if you model this out over the next 2 years, 5 years, I want to buy where even if the rates are a little bit higher, but there's no buyers, guess what? I'm going to be able to come in, beat that seller up, and get a better deal. And at the end of the day, you always make your money when you purchase in real estate. You happen to cash the check when you sell it. So remember that, guys. You make your money when you purchase. And I think we're going to be entering into a time right now where it's going to be very advantageous because rates have already dropped. I think I was talking to Ness about this last week, right? His first quote, well, I'm not going to give everybody the business what his quote was, but let's just say it dropped considerably. And a lot of that was because what was happening at the government level. Again, things that I want to make sure that I'm paying attention to is what's the runway of this money with the government? Because does it make sense for me to act today? Which it does if I'm going to do a buy sell, because I'm getting in before it spikes. I'm getting in at the best interest rates. And again, it typically takes, I don't know, let's say a couple months for stuff to really kind of pick up as far as that goes. And the reason for that is that there's a group of people right now that have just been chomping at the bit. They're ready to buy. They may have just caught the peak of bottom unintentionally because of something that might have just happened. But then those that are just starting the process now, it can take some time for that to happen, right? And again, for those that are out there, like create a Dropbox, create a Google Drive that has your last 2 years tax returns, your last 2 months bank statements, your ID, all the things that you would need to buy a home. It's called a needs list. Have that stuff prepped up and ready to go. Talk to your lender ahead of time. That way, there, if you see something that comes up, you don't have to wait a week to be able to pull the trigger. You're like, you know what? I'm already pre-approved versus pre-qualified. Difference there is pre-approved means that they've already looked at all my documents. I'm approved now. I just need to find the property versus if it's pre-qualified, in which case then they've just looked at my, they pulled my credit. I told them how much I made, but none of that was verified. That process tends to take a little bit longer. And so if you go ahead and get yourself pre-approved at the end of the day, that's something where that's going to put you as a competitive advantage as a buyer versus others that aren't ready to go. And again, I think as the government has entered the chat, I think that's a huge thing to say. Man, we got Tasso in the house. Tasso, thanks for jumping in here as well. Um, that's kind of one of the biggest things right now that I think is maybe some of the biggest news that's happening, at least within the US market. Globally, there's some even bigger stuff that's happening at the end of the day. And I think that could be potentially a positive, right? Because a lot of times people, other countries and other nations look at the US as a safe haven for investing money. And if things are very tumultuous in other countries, that money is going to flood to safety. And I think the United States real estate market is definitely one of those markets at the end of the day. Let's see. Oh man, I don't know if you guys. Let's see what else we're going to talk about today. Um, Headlines over at ABJ. Um, Fight for the downtown. But yeah, the IHOP downtown in Austin is right on 35 and Cesar Chavez. For those that don't know, that don't live in Austin, it's an amazing piece of real estate right downtown. It's in what's called CBD, which means that you can go up as high as you want at that point. And the people that are fighting over it are like the shadiest people out there. You've got Nate Paul, you've got the dude that just got busted for an affluent drug ring in Tarrytown, and somebody else. I don't know if this is just a way for ABJ to grab some headlines or not, but it's pretty interesting. And guys, for those that don't know, this is also an AMA, right? So you can ask me anything. Let's see. So somebody on in the Facebook said purchase equity over rate. Absolutely, Mark, I agree with that 100%. And basically, what that means is I would rather buy a property that is less in, if all things are equal and my payment's going to be the same, I would rather pay a higher interest rate and less for the property. Because when I go ahead and sell it, I'll be able to go ahead and cash that check. And the nice thing in the US, if you live in a property 2 out of past 5 years as a single person, you get to take 250,000 tax free. As a married couple, you get to take up to 500,000 tax free. Now there's going to be some different rules within that and whatnot. And obviously, definitely consult your CPA and attorney, depending on what state you're in and whatnot. But overall, that is definitely a true statement. And a lot of folks, if I was going to, if I was a single person or recently married, and knowing what I know now about how you make your money when you purchase, I would move every 2 years until it was time for me to move in a way where it was about family, about schools, everything else. Because if you were looking to buy your first home, you can purchase a home in an area in the outskirts of Austin for 200,000, zero down right now, all in payments 1,700. Let's say it's a 4 bedroom. You can then go ahead and lease that to two coworkers as well, rent some bedrooms out for maybe 600 a month plus bills. Now all of a sudden your cost to live there is substantially less. Do that for 2 years, go buy another property, right? Take that equity, go ahead and sell it, or turn it into a rental at that point, and just continue to do that. And I think that you should be, if you're buying properties right, if you're 25 and by the time you're 35, you should be able to, in my mind, have a net worth of close to $1 million just by doing that, tax free. Because if you're buying right, living in it 2 years, and then turning around and selling it, that type of equity, buying in the right areas, is going to be something that's great for you. Guys, again, this is Paul Smith tuning into the 12 at 12. Did he put something in there that says, does the government getting involved mean anything will be propped up? That is a great question. Potentially, right? I mean, look, everything the government does is propping up the market. That's how they turn on the printer. That's how, like, they have to inflate their way out of everything that's going right now. Prices need to continue to go up for us to be able to do cash out refis, to be able to buy more cars, to be able to buy more houses. If there's a huge dip in the real estate market in other markets, that means people just aren't feeling as good about their current situation. That's why the stock market has to continue going up as well. And how do they do that? They do it by printing. They just print money. And what happens is the dollar becomes worth less and less at that point. And that's the fine line that they're playing right now between hyperinflation, deflation, stagflation, which means that there's no inflation at all. And there's an interesting game of chess right now that's happening with the president and with Powell, who's the head of the Fed chair. And I've never seen this before, and I don't necessarily know if anybody has. But Powell came out and spoke directly against the president, saying basically what you're seeing right now and what the president's trying to do. Because for those that don't know, the current administration is trying to charge Powell with federal charges um, because of the essentially the remodel that was done on like the four Fed buildings or the two Fed buildings, however much it was. And that's absolutely crazy. Things go over budget all the time with that. And what's real, what's not real, I'm not sure. However, I'll tell you what, I've never seen a federal charges brought against somebody that's the head of the Fed. And the reason for that is I think the reason for that is because Trump wants his guy in there. If Trump controls the Fed, those that know what they're doing are going to make a lot of money really quickly and then put it in gold because who knows what's going to happen after that. But I will make a lot of money. If you listen, you will make a lot of money too. And it'll be a short amount of time. It won't be 10 years. It'll probably be maybe the next 3 or 4, because the policies that are going to come in are going to be designed to turn on the printer. And there's going to be a huge redistribution of wealth at that point. And so, we can either pretend it's going to happen or not, but you need to be educated on it. So that way there you can act on it at the end of the day. Let's see. Somebody just asked, first time home buyer, what's the deal with unpermitted work? Should we avoid completely? I think a lot of that depends on what the unpermitted work is and what part of town you're in, what part of the state you're in, right? Permits in the Hayes County are completely different than permits in the city of Austin. And were permits pulled correctly? Were there no permits done at all? And then what you need to do is if there was no permits pulled at all, then you as a buyer may need to assume that that needs to be removed. And then pricing would be done, according to that. So again, I think that's a case by case basis. If you want to hit me on the side and discuss, happy to, and happy to help out in any way if you want to on that to talk about permits. Again, not everything is equal, right? A permit. Actually, I had this happen one time where I had a buyer that bought a home, went all the way through the process, and come to find out, this is new construction. Come to find out, the builder never pulled permits. So then they had to retroactively go through and get the permits done to the permit process. Well, what that meant is that was a great opportunity for my buyer because we were able to renegotiate at that point, and the seller found themselves in a spot and they ended up getting a good deal because of it. And guess what? When it sold, nobody knew any different. Buyer made more money. So it was an opportunity at the end of the day. Guys, again, this is Paul Smith tuning into the 12 at 12. Thank you all for tuning in. Some quick stuff real quick. Let's say U-Haul data reveals that Central Texas ranks number 3 in the U.S. for movers. In other words, they're saying people that are moving out versus moving back. They can track that with U-Haul. That's a great thing. Again, we have in-migration of people, positive in-migration of people. It seems like every week there's another company announcing something dope happening. Obviously, Blue Origin, there's a large manufacturing company that's coming in that hasn't been announced yet. Another data center is being built here. If we think at the end of the day, the crux of everything going forward in the term of technology is going to be based on semiconductors and chips, guess where they're making them, y'all? They're making them here. So that to me is why, again, if the government is doing something where the government's going to enter the chat again, now what are the cities? Where are the bets that we're going to place? Right? Imagine you're playing roulette and you all of a sudden know that it's going to hit black versus red. Well, then guess what? Now you're 50% chance of hitting over other people. Now let's say we know that's not only that, right? Let's put that as Texas. Now let's look at Texas and look at the different cities within Texas that you can go ahead and place your bets on. I think for me, it would probably be Dallas, Fort Worth, and it would be Austin. Again, guys, my name is Paul Smith with 12 Rivers Realty. Tune into 12. Kaylee Murr in the house. Kaylee, hope you've been well. If you all have any questions, please feel free to hit me up. We got a newsletter. We got, what else we got going on here? That's all we got, man. We got a newsletter. We got a bunch of other stuff. Now, thank you all for tuning in again. Be good. Peace.